Well, what a week it was here in Florida. My goodness, our hearts and thoughts go out to all of those folks that were, in some cases, just completely wiped out up in the Panhandle as a result of the hurricane. You know, looking at the pictures, Christina, I was just, it's always shocking the force of nature that can literally destroy houses and buildings in a single in a single sweep, if you will.
Yeah, absolutely. I mean, along the coast, it's really sad.
Yeah,
really sad.
Oh, absolutely. And that area in particular is one that we would go to quite often every year because that is sort of Scallop Central territory.
Yeah, it was a little by Steamhatchee. I know
Right.
we always went to Steamhatchee to Scallop when my
Correct.
son was younger. So
Yeah, that whole area of the beautiful. If you've never been there, it's a beautiful area. Probably doesn't look quite so beautiful right now, but I'm sure the folks up there will rebuild and get it back to its natural beauty. But a beautiful, beautiful part of
Absolutely.
Florida, that is for sure. So our thoughts and hearts go out to those folks that were impacted by the devastation of that hurricane. This weekend also marks Labor Day. So for those of you who haven't been paying attention, it's a extended weekend. So that's good. Got anything fun planned for the weekend?
yeah, actually, my family and I are heading out to the beach a little bit. Gonna do some surfing and fishing. We like outdoor activities, so this is a good time. Kind of always the end of our summer trip to knock off a beach trip.
Very good. That is very good indeed. And certainly I'm sure I've got some fun stuff planned between being with the kids, actually sadly seeing one off this weekend to go back to school. So we'll have a much quieter house. On the show, we're going to shift gears and talk a little bit about a couple of things that people like. Specifically, we're going to talk about people liking to save money. You like to save money, Christina?
I do like to save money.
Most people do. And then we're also going to talk about if you like or if you want to retire early, what are some of the things that you need to be doing now in order to best prepare yourself? So the saving money topic is directly correlated to all of these increasing power bills and the heat that we've experienced here in Florida and really throughout the country so far this summer in particular. And we're going to talk about a lot of different ways to save that are courtesy of some of these energy tax credits that are floating around out there these days.
Yeah, absolutely. I mean, I think I've had my largest electric bill this summer that I have ever had in the existence of owning a home.
Right. Had somebody the other day tell me that their electric bill was over $1,000. I mean, that's just for one single month, and it was just him and his wife. So
Wow.
that
Hopefully
was
it's a big house.
pretty pricey. Either that or they need to not run it at 65, I guess. But there's just a ton of credits out there. And what was interesting about this topic, Christina, as you were unpacking it for us over the course of the week, is there's just a lot to digest inside of these energy tax credits that were put into play with the Inflation Reduction Act, and a lot of money at stake as well.
Yeah, there is a lot of money at stake. Folks can save thousands of dollars if they utilize these credits. Unfortunately, like many of our tax codes, it is very convoluted regarding the type of credit you're looking for, your amount of income on some of these, energy saved, and then there's also some state-based additional monies you can find.
Yeah, so it's so multi-layered. I mean, you can get money back from the feds, you can get money back from the state, you can get money back from the local power company. I mean, it's really almost like you got to go through 10 different steps in order to be able to sort of figure out where the money where the fullest benefit is going to be in order for you to save money. So we're going to talk in detail about that on the program, along with some of the tips that folks need to do now to get ready to try and claim these credits, right?
Yeah, absolutely. There is some steps you can take, some sort of pre-planning. There's also an audit, an energy audit we'll get into. So there's definitely some things you can do right now.
Yeah, because and that energy audit is going to be crucially important, because some of these credits are even depend upon how much energy you can prove that you saved.
Yes, they are, and there's different amounts that you can obtain as a credit based on how much energy you're saving. So the more energy you save, the more credit you can get.
About $9 billion, was that the number from the Inflation Reduction Act?
Yes, $9 billion is up for grabs overall between federal and state, and specific states have different amounts available as well.
And here in Florida, I think the number was
$350 million.
So a lot of money. I mean, if you're thinking about trying to improve your power bill, and who isn't right now after opening last month's power bill during the heat of July here in Florida, then this show is for you, because we're going to kind of go through what you need to be doing now to sort of get organized to try and claim some of these credits, a lot of which is not quite fully fleshed out. Like, we don't know a lot of the details on some of this stuff.
Yeah, that's true. A lot of the federal package portion is already rolled out, but the states are still developing their plans and how they're going to utilize those funds.
And again, another good reason why we do this program every week, and we encourage you to subscribe and be a regular listener on our various podcast platforms here on Dollars and Cents. If you have any trouble finding any of those platforms, just go to our website, Nelson Financial Planning, and in the upper right-hand corner, you'll see a bunch of icons that should look familiar to you. Click on the one that is most familiar, and you'll get immediately connected on over to our program. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning. If you haven't figured it out yet, joining me is Christina Lamb, fellow certified financial fiduciary who also happens to be an IRS enrolled agent. So clearly talking about these energy credits is kind of in your jurisdiction, if you will.
Yeah, and I think it's great timing for the topic, so folks can have some time to prepare.
Yeah, it is shocking, to say the least, what some of these power bills are coming in at. It really is just dramatic how big the increase is versus any other bills that we've seen. And then I guess we will welcome to Florida, right? A lot of people like to retire early. Yeah, you do have the downside of the hurricanes coming through, but maybe you've been there where you're driving out to work, or maybe you drive past a golf course on the way to work, and you're like, man, I wish I was out there rather than driving into work. Have you ever had any experience like that where you're like, man, I wish I was doing something else besides driving into work?
Yeah, definitely. I certainly have a long drive to work. And so one of my favorite things is to walk my dog in the morning. And it's always hard to try and cram that in when you got all your other responsibilities.
1 minute.
That is true. That is true. So we'll talk about some of the things that you can do to retire early. And this is a great tie-in to the program that, Christina, that you and Rob did earlier this summer, because one of the biggest things that you need to do, which you wouldn't necessarily think of that, you often think about establishing a budget as something that you need to do when you're younger to kind of get yourself in financial shape. But establishing a budget as you're preparing for retirement is equally important. So we're going to tie in kind of that program that you and Rob did earlier this summer into that conversation of how best to prepare to retire early. All that coming up next here on Dollars and Cents with Joel Garris and Christina Lamb of Nelson Financial Planning. There's a lot of ways in which you can save money. On this segment of the program, we're going to talk about some of the ways you can actually save money by becoming more energy efficient. And there's a lot of money at stake here for our listeners, isn't there?
Yeah, absolutely. $9 billion in federal and state funding.
Right. And obviously, there's a big debate as to whether those credits were necessary or not, or what they're going to do to the long-term impact of the federal deficit and all of that. We will save that for talk radio shows that focus on politics. Our job here at Dollars and Cents is to interpret what the available legislation is and try and help you make the best possible sense out of these types of decisions that involve your dollars. So there's a lot of credits out there. Right now, people are opening up their power bills from last month and just, in a lot of cases, just being completely surprised by the amount that those bills are coming in at.
Yeah, absolutely. As I said earlier, I received one of my largest bills I've ever had last month, and I noticed that we had an energy price increase with my power company. And then on top of that, the heat. And, just as you get older, I think you drop down the AC a little bit more too. But it was astronomical.
Well, and it's not just this, it's not just perception, it's reality. If you look at household costs over the course of the months of June, July, and August, and compare that to where they were last year, there's about a 12% increase on that. Not just on the cost, not consumption, but cost, just pure cost.
Yeah, no, I looked at that as well, because on the back of my bill, they show you how much energy you used last year.
Sure.
And it was pretty much the same. It was very insignificant difference. So it was purely the cost of the energy.
That's the whole inflation running in there, if you will, which I guess is why a lot of these energy credits were in the Inflation Reduction Act, is to try and address some of these increasing costs by encouraging people to become more energy efficient. The limitations, though, on this is that a lot of the details are still quite fuzzy, but we're going to try and get into some of the overall concepts as we start to see more and more details of some of these energy saving credits roll out in the months and years ahead. So welcome into the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. My name is Joel Garris, certified financial planner, certified financial fiduciary with Nelson Financial Planning. Joining me on today's show is Christina Lamb, also a certified financial fiduciary and IRS enrolled agent at Nelson Financial Planning, where we got a team of great folks that stand ready this week to help you change your life with a successful and cost-effective financial plan. So these energy tax credits, I mean, they really are pretty powerful because they are tax credits. And so that makes a difference on your tax return, the difference between a tax deduction versus a tax credit. Why don't we talk a little bit about that first, Christina?
Sure. So a tax credit comes off of the amount of taxes that you actually owe versus just dropping down your income, which is a tax deduction.
Right.
So, and as long as you owe money, you will get and see all of that refund.
Tax credits, clearly more powerful than a tax deduction.
Absolutely.
A tax deduction effectively gives you a portion of that back, but a tax credit, it's dollar for dollar. So if you've got an energy tax credit, or you're able to claim an energy tax credit, it's just like getting a coupon of, say, 30% off the total price. And I think you were sharing with me a situation where there was a tax return that you were looking at that where these folks had bought solar, and how much of a tax credit that produced.
Yeah, so in this particular situation, and I think it's pretty average for installing a solar system onto your home from scratch, they spent $50,000 on a solar system. Their tax credit on solar, which would be 30%, came to $15,000. So in their tax situation, it was literally dropped what they would have owed by half because they got a $15,000 credit.
I mean, it really is pretty powerful. Just like a money right back in your pocket that effectively takes the cost of that system from $50,000 down to $35,000. And that's the concept, right? That's the concept behind all of these energy credits, but there's so many different types of energy credits. So what are some of the credits that folks might be able to claim going forward through all of these expanded energy tax credits?
So there are 4 different main types of credits. The first is solar, which we kind of briefly touched on. It is a 30% credit. Now, we've had that credit in the past. This is bumping up the percentage you can get back a little bit. kind of carrying that credit forward, for future years. The next is the electric vehicle credit. This one you can get up to $7,500 back. You do have to be careful, though. I've had a lot of folks call in thinking that they're going to be eligible for that portion of the credit, and it's very specific. Your electric vehicle, if it's a regular car, it can't be above $55,000, which is really not that much on a car.
Right.
And an SUV is $80,000. And there's specific cars listed. They have to be U.S. made. There's battery requirements. So, like you'll see with many of these, very convoluted.
And the electrical vehicle credit in particular, it's one where details really matter. And you've got to sort of check the box or fit inside the box of the requirements that are laid out to claim an electric vehicle. It's not like you can go out and buy any old electric vehicle and say, oh, I'm going to save $7,500 on my tax return.
Yeah, absolutely. And I think, unfortunately, what I'm hearing from clients is that these car dealerships aren't pointing all of that out. They're just saying, oh, there's a $7,500 credit.
It's
and
electric.
Not pointing out
It's electric.
the specifics.
Yeah, so be very that you know what, that is a fair point, Christina, because it's not the car company ain't going to do your taxes. You're going to do your taxes, and it's probably going to be a few months after it's definitely going to be a few months after the car, because to get a credit, you have to purchase the car in the calendar year, and then you're doing your taxes in February, March, April of the following year. So, the car dealer ain't going to prepare your taxes. So you better make sure that you qualify for some of these electrical vehicle credits. So that's the second category. What are the other two categories?
So the third one, I'm considering it appliances. This would be like your hot water heaters, insulation, technically not an appliance, but items that you can add to your house, not a huge necessary cost. So if you're looking for something a little bit more economical, this could be an area you could fit in. You're also getting 30% of a credit on these items. And then the last category is energy saved. So energy saved is where you're going to involve an energy audit, and it's about just your whole house in general being energy efficient. And so here you can get up to an $8,000 credit. Now that is for lower income folks. For higher income folks, it's $4,000.
So, but still, that's a considerable amount of money and a considerable amount of credit that you can get. So, what are some of the tips? So those are sort of the categories of credits that are out there. What are some of the things that folks need to be thinking about now in terms of sort of preparing to take or to obtain the greatest amount of tax credits when they're trying to improve the energy efficiency at their home?
I think the biggest helpful thing I saw, considering how convoluted this is there's an app available calling rewiringamerica.org, and so it helps you sort these credits, put in your income, and see what you might be eligible for.
Because these credits, it's not just automatic. I mean, they are dependent upon no less than sort of 3 or 4 different things to be thinking about, right? Beyond the energy saved, you've got to look at your income. You've got to look at your state of residency. I mean, there's all kinds of layers of this. So we're going to try and unpack some of those layers when we return after the break here on Dollars and Cents with Joel Garris and Christina Lamb of Nelson Financial Planning. Before the break, we were talking about these energy tax credits and sort of giving information on the 4 main categories of things that you can buy to make you eligible for those energy tax credits. So Christina, just real quick recap for our listening audience, those 4 categories, if you will.
Sure. So we have solar, we have electric vehicles, there's appliances, and then energy saved.
So all of those are sort of the types of things that you can do to claim these energy tax credits. But the actual process of claiming the tax credit itself is totally different and dependent upon a variety of factors. So what are some of those factors, Christina, that folks need to be aware of if they're going to try and claim one of these energy credits?
Right. So first is determining the type of credit that you're going to claim, which is the 4 categories we went over. Next is determining the energy saved, which is started out by doing an energy audit. And there's a credit of $150 for just doing your energy audit. So that's somebody coming to your house and assessing, are you saving energy? Are your appliances energy efficient? Insulation, things of that nature.
And let's stop for a moment and just highlight that energy audit, because that's certainly something that you can do now to help sort of set the table for the projects or the things that you may want to do that ultimately, maybe there's certainly a cost to all of this, and the cost, if it's defrayed by some of these energy tax credits, may help you actually do those projects at a point in time where, okay, well, maybe you didn't have the money, but if you've got a coupon for 30% off, courtesy of a tax credit, then maybe you're more inclined to do those kinds of energy improvements.
Yeah, I think one of the most unique things about this that hasn't been so much in the past about any energy efficient credits is you can stack these. So if you get solar, you're also probably going to be eligible for some sort of energy saved credit.
Wow.
And so that's why the audit is so important, because it'll stack on to some of the other credits that you're eligible for.
Well, and in the past, when we've seen these energy credits, they have been lifetime credits, meaning okay, if you do something, then you have up to X amount of dollars, and it wasn't a very big number. I'm trying to remember what it was. I think it was like $1,200 or $1,500. But then once you did that, then that's it. You don't get to claim the credit anymore again once you maximized out that credit.
Correct. And so these are a little bit more stackable. There are some lifetime limits, but they're much, much higher.
Wow. So so we look at the type of credit, we look at the amount of energy saved, and that's why it's so important to get that audit of where you are right now. What else should taxpayers sort of be aware of as it relates to these energy credits?
Right. So the next one is your taxable income. So these credits are based on how much income, especially if your joint return, is coming in together. So there are more credits for lower income folks, and you get a little bit less for higher income, but they're all still fairly significant.
Certainly. And then lastly, it's sort of your state of residence and just a variety of even local or power company credits that are available as well.
Correct. It's utilizing what I consider all three agencies: the federal, the state, and then the utility companies.
So some interesting stuff. Bottom line, it starts with making sure that you do the energy audit, making sure that you think about timing. All of these projects, yes, there's sort of like coupons off and with tax credits, but you still have to pay for the cost of the project first.
Correct.
And then you file your taxes and get the tax credit. So understand that there's a little bit of a budgeting or timing thing that you want to be thinking about as you're thinking about these energy improvement concepts. And then lastly, when you do your taxes, there's a form for that, right?
Yeah. So there is a form. It's Form 5695 that will go along with your tax return, and I would recommend getting some professional help on that.
Indeed, because especially if you want to try and maximize it, right? Because
Yes.
we're talking about stacking different credits and different ways to maximize this out. So, and I guess that really does get to the bottom line about these energy credits is certainly keep listening to the program, subscribe to us on our podcast platforms, because obviously this is something we're going to continue to talk about as the details come out. And ultimately, to your point, Christina, make sure you're speaking with a professional as to whether it really qualifies or not. I was intrigued by your story about talking to clients that are thinking about buying cars, and saying, oh, well, the dealer said I'm going to get $7,500, and the dealer ain't filing your tax return. Yeah.
One of the main things I always recommend to everyone, it seems so simple, but just go to irs.org. It's one of the few things that the IRS has fairly well organized, pretty straightforward. Put in electric vehicles, and they'll give you all the guidelines.
Direct to the IRS website.
Yes, don't go somewhere else. Don't read somebody else's article. IRS.gov.
Yep. No, IRS.gov indeed. So anyway, thanks for listening to the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions. If you have questions on stuff like this, we're available during the week to answer them. So maybe this conversation has triggered some thoughts or some questions in your mind. Don't hesitate to pick up the phone and give us a call at 407-629-6477 or shoot us an email through our website at nelsonfinancialplanning.com. We're here to help make sense out of all of these kinds of issues, particularly as it relates to these energy credits, and certainly to try and make sense out of retirement as well. In the beginning of the program, we talked about this notion of retiring early and some of the things that you might want to try and do beforehand. I mean, do you want to retire early? Is that a good thing? Is that something you might want to do? This segment then is for you. So welcome into the program. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary at Nelson Financial Planning. Joining me today on the program is Christina Lamb, also a certified financial fiduciary and IRS enrolled agent. Feel free to check us out at nelsonfinancialplanning.com. So, what are some of the steps as we think about retiring early, Christina? And it often seems like there's like two categories, right? Those that can't wait to retire and those that want to sort of keep working.
Yeah. I think for some folks like myself, it depends on the day.
Right.
But overall, I really do think I'm one of those that would probably work a little longer than retiring early.
I think that's sort of one of the benefits of having the type of job that as long as the mind stays clear, then not too hard to come in and sit in a chair. We don't have a physically demanding job, so that does lend itself to being able to have some degree of longevity in it. But regardless, though, there are certainly some steps that you want to be taking, and as with any exercise, it always starts with what we refer to as running the numbers, right? You've got to take a look at what your overall picture looks like, right?
Yeah, absolutely. And to stress, you actually have to run the numbers, not just sort of ballpark it or think it's correct. I think a lot of folks are surprised when they actually put it on paper where things are going, what they may even have. That could be surprising to them as well. So it is important to run the numbers. And just because you're saving doesn't mean you're saving enough. A lot of folks, set up their 401k, don't really pay attention to it, probably couldn't even tell you how much they're actually contributing. So you want to make sure it is enough for your lifestyle and what you're actually going to need when you retire.
Well, and that certainly goes to having the proper asset allocation as well, because we see time and time again. Matter of fact, just saw one just this past week where the provider had changed within the 401k, and the assets had gotten transferred to the new 401k. And they wound up sort of going into more of a default option, which was in this particular person's case just way too conservative for what they were trying to accomplish with their finances. So certainly one of those things where you have to kind of be aware and make sure that you are have the right asset allocation as well. But there's one item as well that becomes a big part of this notion of retiring early, and that we're going to cover right after these messages here on Dollars and Cents, where we talk and try and help make sense out of all of life's decisions involving your dollars. This is Joel Garris and Christina Lamb of Nelson Financial Planning. Talking on the program about some of the things that you can do to help prepare yourself should you want to retire early. Before the break, we were talking about the importance of running the numbers, getting a handle on what that overall picture looks like, what you own, what you owe, money that's coming in, money that is going out. Also so important, Christina, we talked about saving, investing, and of course, having the right asset allocation, making sure that you're diversified. And then, but lastly, and maybe even most importantly, it's the B word that comes into play when it comes to retiring early.
So absolutely, that's a budget. So budgets are kind of important throughout your life, but I think even more so in retirement because you're on more of a fixed income. When you're working, at some point you can generally always try and earn more money, but in retirement that's not always the case.
Well, and I know you and Rob earlier this summer, I think on July the 9th, did a great show all about budgets, and you had a great acronym for it. So why don't you share that again with our listeners?
Sure. So it's budgets. B is for balance. That means, today versus tomorrow and what you're doing with your money. U is for understanding, and that's understanding your current situation and how it's going to impact life going forward. D is for debt. Pretty obvious. G is for goals. You always want to have short-term and long-term goals. I think it helps you get to where you want to be. E is expectations. T is transitions, meaning, going from working to retirement. And S, we like to add in there for solutions, making sure you're understanding what you need to do to be there.
Certainly a great breakdown of the word budgets. And if you're interested in hearing that program, of course, simply go to any of our various platforms, whether that's our YouTube channel, just search for us, Nelson Financial Planning, or any of those podcast platforms of choice. Again, if you have any trouble finding us on those platforms, go to our website, Nelson Financial Planning, and just look at the icons that are in the upper right-hand corner. Click on the one that looks most familiar to you, and you'll get connected over to our channels. Once there, make sure you subscribe so you don't have to kind of find us again. That way, you'll see when new content pops up as a subscriber. So to underscore sort of that concept of budgeting and why it's so important, not just when you're sort of in that accumulation phase, but also when you're in that spending phase, is everything changes to a large extent when you do retire. And there's certain things that you have to kind of bring into the mix that maybe you didn't have to when you were working. Chief among them is usually health insurance. Mm-hmm. That can be pretty costly and an item that folks sort of overlook in terms of how much that cost is. Right. And then taxes. You still owe those in retirement, right?
Yes, unfortunately.
You're not going to get out of those just because you're over a certain age, or you're no longer worrying, having to work or worry or any of that. You still got to worry about taxes at all times. That's for sure.
There's not a retiree exemption.
There's no retiree exemption. It's funny. I've heard people ask that. Oh, yeah. When don't I get to a certain age where finally I don't have to pay any taxes? And no, they need your money desperately. No matter how old you are, they'll be willing to grab their fair share of tax revenue on it. Absolutely. So certainly some things to be thinking about. And then, of course, for our listening audience, maybe you're struggling with that decision or game plan of how to retire early. That's what we're here for at Nelson Financial Planning, is to have those conversations to help you maybe map out a game plan to retire early, or maybe you have retired already and it's not quite all that it was cracked up to be, and you need some improvement in terms of what that retirement picture looks like. It's not too late to ever make improvements in that picture. So again, that's what we're here for. If you've got questions or you'd like to chat with us personally, feel free to reach out to us through our website at nelsonfinancialplanning.com. So a couple of things as we sort of end the program here this week. One of the things that we've been talking about is making sure that people stay in touch with us because a lot of these things are fluid. And just this past week, there was another example of sort of the fluid IRS that came up, and this time involving contributions to retirement accounts.
Right. So there was a rule put into place, but they're going to push it off now until 2026. But if you were making over a certain amount of money, you could no longer utilize the catch-up on a 401k for older folks into a traditional side.
On a pre-tax basis.
On a pre-tax side, yes. Right. You would have to put the additional catch-up on the Roth side, which doesn't allow for a deduction for you.
So in essence, it was forcing folks, and I think the income limit, and they would be looking at the prior year, was about $145,000. And so if you were above that and you were trying to do the catch-up contribution, which is available for folks over age 50, then your catch-up contribution was going to get forced into the Roth side. No longer did you have the option on the pre-tax side. So And I know in a prior program, I don't know if it was you, I think it was Kristen that was on the program. We were talking about this. It wasn't that long ago. I think it was just this summer. The rule was supposed to take effect in 2024. But per the IRS just this past week, it was extended out to the year 2026. So certainly those kinds of things happen on a regular basis, that is for sure. One of the things about these tax credits that I often think about, and we were talking about running the numbers as it relates to retiring early, but I think you also want to make sure you're running the numbers on these energy credits as well, because it's a lot of money when you start talking about putting solar in and things like that.
Yeah, absolutely. And very similar to the EV conversation I've had with some clients, you want to make sure you're eligible. So if you're planning on spending all that money thinking you're going to get a certain amount back, and that's not necessarily the case, it definitely could change your opinion. So definitely pre-plan.
Yeah, I know when we did the addition on the office, I actually sort of looked at, because we want to be as energy efficient as possible and kind to the planet and all those kinds of things. And so we looked at when we added on to the building, we looked at adding in solar panels as well. And I just, whenever I ran the numbers on them, and maybe it was the system that we would need for an office versus a home, but even with the tax credits, and just to use the example of what we were using earlier in the program, where if you spend $50,000, okay, fine, you save $15,000, but you're still on the hook for $35,000,
right, which is a lot of money.
That's a lot of money, and if it's only going to, at that point in time, it was only going to save us like $300 on our power bill. Well, I mean, that's a 10-year payback period before you would even potentially kind of recoup your money, even with the tax credit involved in that.
Right.
1 minute.
It's a decision, folks have to make is, how are they looking to save money? Are they looking to be more efficient? And is it worth it for them? And I think it's a little individual for each situation.
Yeah, bottom line, make sure you're running the numbers and really thinking about all aspects of it. That's certainly a sort of an ongoing theme of the conversation that we've had this week. I want to take a moment before we have to get out of here to thank everybody who participated in our school supply drive. That drive ended on Friday. Obviously, everybody's kind of back to school, and we want to take a moment and thank all of those who participated in that school supply drive. Very successful. It was the first year we had actually done that, and so we'll look forward to doing that in the years ahead, obviously for a very worthy cause, a gift for teaching, and tools for Seminole schools as well. So thank you all for listening to the program. This has been Dollars and Cents with Joel Garris and Christina Lamb of Nelson Financial Planning. Enjoy the rest of the Labor Day weekend.